What's up? What's up? It is April 4th. Yeah, April 17th, 2025. There we go. Welcome back to another market recap. So, I had one trade today for a full loss, a -1. It was on dollar, Kiwi dollar at the 10 o'clock hour. And we'll get into it in a minute. The 7 o'clock hour, I had nothing. The 8 o'clock hour, I had this pound dollar trade. Pretty solid trade. It just didn't pull back and present an entry. Overall, it's what I look for. So, I have a break of a trend, I have a double bottom, a push, a good breakout, looking for a retest of the EMAs, the fib level, the pivot, and so on and so forth. But it just didn't pull back. It just pushed a target here. So due to it pushing to target, it's no longer really a trade for me. Granted, if I would have adjusted the fib level, it did come back and tap 0.382 and then push again. But by the time you readjusted this position size now for it to be below 0.618 and whatnot, it put the target a good bit higher. So could possibly take something like this, but once something pushes the target, I'm not too interested on taking it anymore. So as we've been over a number of times now. But that was the first trade of the day. First thing I had on watch. It just didn't pull back and present an entry. I had nothing in the 9 o'clock hour, really. And then at the 10 o'clock hour, I had been watching Aussie dollar and Kiwi dollar, essentially, because these runs are pretty overextended at this point. So I've been looking for a pullback of some sort to play. Granted, Kiwi dollar had this, level that was respected decently, here, and then it broke out above when I decided to take this trade. And I was looking to mainly play a pullback to those previous highs. It fit within my normal kind of IBO strategy. It had the main stuff I look for, right? It had a break of a trend, had a clear breakdown. Granted, it's a little shallow of a break. I would prefer the break to be kind of here rather than this slow break here. But either way, it's still a valid break. I wish it was a little more so of a break, a little deeper, because this is at the limit of the position size I can take at 5 pips. And I can only take something this small on a major dollar pair. If it's any other kind of pair, it doesn't work from a spread perspective. It doesn't work really from a leverage perspective. It really has to be a dollar pair. So, but overall, I liked the trade. It didn't play out really at all. It triggered me in and pretty much triggered me out. So, but that is the style with these limit orders. It either is going to tap and go to target, or it's going to tap and go to your stop loss. One of the two. But the interesting thing I started thinking about after this trade and going through and thinking about some of these other trades I've taken is usually when it taps and goes, I'll use this upper time frame for management purposes. And most of the time what that means is that this time frame for me to manage per my style, price will need to come down a bit, and then it'll need to break past the 50 EMA on the 30-second chart and kind of bob around, reject something in that area, like 0.382 or in the pivot and so forth, and then continue back down. Because on the re-break of that 30-second EMA and whatnot, it'll allow me to trigger, say, P1 management, right? But also on this 30-second time frame, this is like a CBO, right? Like really the IBO was there, the CBO is here. And then now this is like becoming a point where it's like the trend is over almost, and it's about to form a new trend, which it did, right? So I went back and I kind of looked at some of the losses I took previously this week, and they've followed a similar trend that I might need to start looking at this 30-second time frame a little closer when I go to try to execute some of these trades, and make sure it's still within trend with what I'm targeting on the 2-minute run. Or it's a non-factor. Like I've got a ton of screenshots of trades that I've been tracking over the past month, but I need to sit down and kind of sift through them. But it's just a thought I had today to kind of think about, to do some research and see if the losers that I've had through doing this kind of, micro time frame trading and this strategies, the IBOs and CBOs for them, are those losers primarily when price looks something like this, like already kind of has an IBO on the 30-second, then a CBO on the 30-second, and then price is starting to reverse. But on that reversal is where I'm getting in to say go short in this instance, but it's already formed a trend change on the 30-second, so it's just going to take me out almost immediately. So it's interesting. Very fascinating. I think this CAD Swiss later in the day is kind of an example as to what I'm referencing. Like this, I had this on watch at the one o'clock hour. It didn't fully pull back to present an entry for me, right? But I'm sitting here and I'm watching it. Granted, this is a beautiful trade. Like I really wish this just pulled back another pip or two and I would have been in it, and it would have been a clear, like I had a position size for 2.5 R. So, but it, double top, clear break of a trend line, nice push roughly to the middle between these two EMAs, a solid pullback. The 1 hour is sitting at the 200 EMA as well as a decent horizontal support. So it's bouncing off of that. And I have this confirmation of that trend change on the 2-minute. So everything's there. It's solid trade. But if we watch the price action here, like it comes down, and this is just a linear. It's not trending. It's just a solid break, even on the 30-second. And then it's coming back, and it's essentially now a CBO on the 30-second, right? Like it's an IBO here. It's just breaking the 50. On my 30-second, it's breaking the 50 and the 200. So it would classify it as a complete breakout on the 30-second time frame. So now it's a CBO. So I don't want it to really push past these EMAs. If it's a CBO, I want it to recheck them and continue lower, right? And that's what it did. So that's what, as I was watching this trade and then thinking about the trade I took as a loss today, I kind of had that epiphany, kind of that thought process pop in my head. It's like, if there's a good possibility that these IBOs that I'm targeting on the 2-minute time frame will need to be a CBO on the 30-second time frame, and for it to be a valid CBO on the 30-second time frame, then I don't want it to push past this 50 EMA, which then plays into question, how do I effectively manage these trades at this point if I can't use my normal style of using the 50 EMA as my first step of management? It's typically, say this 50 EMA is like down here. When price breaks it, I'm able to do P1 and clip the high. And then when price comes back and retests it and continues lower, I'm able to go to break even if I'm not already there. So looking at this trade, it's almost like, okay, do I use the 15-second time frame in that iteration, right? Because this 2-minute time frame is going to be an IBO. The 30-second time frame is going to be a CBO, which means the 15-second time frame likely is going to be an ACB, which it kind of is, right? Like an ACB usually breaks down, and then like a large breakdown requires like a couple, pretty much like an ACB kind of pullback, right? Which this kind of has. And this is typically like trades that I'm taking on, say, my daily time frame when I'm targeting a 1 hour run. They're usually like ACBs on the upper time frame that I have right here, which on my daily layout is my 10-minute time frame, right? So that's why it makes sense to use the 50 EMA as the management style. But I think it may make more sense for me to use the 15-second as the management style in like an example like this, because I don't want it to push past this, because if it push past this, then it's more than likely a breaking trend and I'm in for a rough time, right? Like it's by that time I'm going to enter late and then be taken out. So in this example, like if I want this to be treated as resistance, then I kind of have to lower my entry point a little bit, and put it right at that EMA rather than maybe right at 0.382 is another thought. But if I do that, then I have to use the 15-second as my management, I would think, in which it works. They would work as my typical fashion, right? Because price would pull back. It would, tag me in on this clear breakdown of the 50 EMA on the 15-second time frame. I'd go to P1, so I would clip this high. So I'd almost be at break even in this example. And then as price comes down and then retest that 50 as now new resistance and then continues lower, I would then clip that high as P2. Most of the time, P2 would bring me to break even. And then the trade would ride. It would ride until I roughly get to the halfway point and profit. And then once price is pushed past the halfway point a good bit, I'd lock whatever the halfway point is. Usually it's locking 1R, because most of the time my position size are 2 to 1s. And then I let the trade just ride at that point. And then it either goes to 2 or it takes me out for 1. So, but it makes sense to maybe switch to the 15-second in that time, and that kind of this thought process. So interesting. I'm learning like little bits as we go here of trading these micros, of like some things that have to be adjusted, it seems like, to effectively do so. Because this is the fourth trade now, this CAD Swiss trade, that presented an entry, has really clean price action, has everything I look for, but just doesn't pull back all the way. 2.382 to give me an entry, to trigger me. And so it's another 2R, 2.5 in this example, but let's just say it's 2. It's 8R this week that has not been able to be captured because it's not pulled back an extra pip. So, and ironically, of all the trades that I've identified this week, the only ones I've been able to take are the ones that have failed, that have pulled back to a point where they've been able to trigger me in, and then they've triggered me out almost immediately. But the ones that all the other trades I've identified this week that were on my watch list have played out. They've either pushed to target and not presented an entry, or they pulled back within a pip of the entry and, rejected an EMA before it got to 0.382 and then continued to my target. So like it's a little frustrating, but also kind of interesting at the same time. Because like on paper right now, I'm sitting at negative 3R for the week. So on paper, I'm 0% on my strike rate. But as far as trades that I've identified, I'd have to go look at my sheet, but my strike rate's like over 60%. Like the only 3 trades I've lost are the 3 I've been able to enter. and of all the stuff I've been able to identify. So interesting. But switching gears a little bit, going back to the 10 o'clock hour, I took this loss, right? And I took this loss around 10:22 or so, I think is when I was triggered out. And, price never really broke down. I still believe it's probably going to break down at some point, but the question is when at this point. Who knows? I was watching this for a while throughout the day. You can kind of draw in like a trend line here. And now price is just holding this trend pretty well. So on a break of this, I feel like it's going to be a very solid trade whenever it does break that trend line at some point. I don't know if it's going to be later tonight or hopefully it's, tomorrow at some point during New York and I can have a second shot at this trade. But right after that, in the same hour, there was this dollar yen trade. And I'm sitting here having just taken a loss, right? And I've done my work. I've identified a trade to take. And I took the trade when the entry became available. And my goal is to enter a trade an hour. Like identify the best setup of that hour and the first setup that pulls back for an entry, take it. It is what it is. Like it either plays out or it doesn't, right? But with the first trade I take being a loss, I'm also wondering if maybe I should change that rule up a little bit. And if I have a situation like I did today, like Kiwi dollar, I take the trade, it's a loss. Halfway through the hour, though, I identified this dollar yen trade. Very similar kind of price action, right? Like a clear break of a trend. You kind of have a little bit of horizontal support here inside of this pattern. So you kind of have the inverse head and shoulders. Price pushes up roughly to the middle point between the EMAs, pulls back to 0.382, and then continues to target. So everything that I essentially look for in an IBO. And I could have taken this trade, and I didn't. And at the same time this was happening, I was watching dollar Swiss, which also had a setup. So, you have this, support zone here. You have a trend line here, a clear break of all of that to the upside. It's kind of like a CBO at this point. The thing I didn't like about it is that it was sitting at the daily R1 level. But, you still have a nice previous candle close on the 1 hour chart. So you do have a bullish bias. And the price action confirms that bullish bias, right? So you have a wave 1 breakout, wave 2 pullback, and then play wave 3 here. But this trade technically would have already pushed to target, because at the opening of the hour, price would have been here, which means my fib level would have been here, and price never really would have pulled back to that before it pushed to the target, because I would have been position size for a 2-to-1 essentially to that point right there. So thinking that through, when I was looking at this trade, I'm like, okay, well, it's something that's already pushed a target, so therefore it negates my trading style. It doesn't fit at this point. But when you change the fib levels and you just look at the price action and you just don't think about the pivot levels or what price was at when the hour closed, it's still solid price action. And if we clear out of the replay wise, the trade played out. It played out easily. So in this hour, there was really 3 trades. There was this Kiwi dollar at the very beginning, and it was a quick loss. And then I could have taken either one of these. The entries were at the same time, essentially. and they were right after the Kiwi dollar trade closed. And I saw them, but I did not take either one of them because I'd already taken a trade that hour. So I had the potential today to put myself into the positive for the day, but I didn't execute on either. So probably going forward, I need to, if I take an immediate loss and there's another setup that hour, just take another shot. So there's also some in my head. I'm like, all right, well, I just took a loss on a dollar pair. I have 2 other dollar pairs now. What's to say my bias then is going to play out if it didn't play out on this dollar pair? But this is really kind of a Kiwi move and not really a dollar move. So interesting. Very interesting. And then I have this Euro Aussie trade. This was not in the 1 o'clock hour. This was actually in the 2 o'clock hour. I stayed in front of the charts an extra hour today just because I really didn't want to end the day on a loss. I was looking for something to take. But after the 10 o'clock hour, I couldn't find anything in the 11 o'clock, 12 o'clock. And then the 1 o'clock, I did find that really nice CAD Swiss trade. It just didn't pull back fully. So, but I did find this Euro Aussie trade. Same concept, it's an IBO. Everything else that, these previous trades have looked like is there. It's sitting at a decent level here. You have a good kind of bullish candle right there on the previous hour. We're clear break of a trend here. And so I'm just looking for a pullback and then a push to those EMAs for a 2-to-1. And price it never pulled back. So I had 2 trades today that didn't pull back and just pushed a target. 1 trade was a loss today. 1 trade pulled back within a pip. And then there was 2 potential trades I could have taken for 2R. Yeah, it's interesting. But you go through and you look at all these trades, and all of these trades play out, except for, ironically, the one I actually took. That's the little bit of the frustrating thing this week, as we've already kind of gone over. So just making me start to believe I might need to truly lower that entry point on some of these trades. Because if they're going to play out, then they likely play out in a fashion like this, where they barely, if at all, tap the entry point and then drop the target. And if they're not going to play out, then they're going to push to my normal entry point, right? And then take me out. Anyways, this is what it seems like. But this over the weekend, I'm going to go and spend some time going through all the screenshots I have of all the examples I've gathered and see if this theory that I'm now forming in my head is accurate when it comes to losing trades, and if it also applies to the winning trades. Are all the winning trades that I've been able to gather so far, do they look like, even this dollar yen, this dollar Swiss, they're tap and goes, right? Like they get to the level, they tap, they go. Dollar yen gets to the level, it taps and it goes. So an entry even if I put it at the EMA, it's whatever. Even if I have to sacrifice a little bit of, say, the stop loss here, the issue will be when it comes to the target, right? Like in an instance like this, like that's I'm still not super comfortable with the stop being right here, because it can push to, say, 0.5 and then go to target, right? I've seen that happen. So I don't know. I just got to go do some more research, figure that one out. So either way, that was my day. And so I have 1 day left in the week. I know the potential of this trading style, and I know that it's still possible to put myself in the positive tomorrow on a Friday. So that's the goal. I mean, 2 trades will put me into the positive, like just 2 quick winning trades, 4R, put me +1 for the week. And then I know there's a possibility of catching 3 or 4 in a day. So as long as they present themselves. So still positive. So still thinking positively. I still think there's time left in the week to turn it around and turning to a net positive, at least monetarily wise, and not just, theoretically on paper when you look at all the trades I've identified, because it really matters on the ones I'm able to take. But nonetheless, I still feel like there's progress this week. I still feel like I'm compounding progress each week towards mastering this kind of style and understanding like the nuances of it and the things that need to be executed and how they need to be executed. So still think I'm getting someplace. It'll be interesting to see how next week goes, honestly. So, but that's it for me. I will catch you guys tomorrow. See you.